In today's financial markets, I mean, everything moves so incredibly fast. It's hyper connected, right?
Blindingly fast.
Yeah, and data's just streaming in constantly. It feels like trying to drink from a fire hose sometime.
It's overwhelming.
So how does anyone even, keep up, let alone make consistently good decisions without just burning out?
That's the million-dollar question, isn't it?
Okay, let's unpack this. Today, we're doing a deep dive into how artificial intelligence, AI, is really fundamentally changing the trading world.
Yeah.
Our mission here is to cut through the hype, cut through all the noise, and really show you how AI can enhance trading. And we're basing this on a whole stack of sources, Investopedia, Forbes, even the IMF.
And it's really crucial we do because, AI isn't just some buzzword anymore in trading.
It's moved beyond that stage.
Exactly. It's rapidly becoming a strategic necessity.
Right.
Modern markets, they operate at these dizzying speeds, massive volumes of data. It's just way beyond what a single person can handle. And think about the emotions involved. The fear when things drop, the greed when they spike.
The emotional roller coaster.
Exactly. AI, it's immune to that. It just executes the strategy flawlessly, even when your gut is screaming something else. So integrating AI helps traders overcome those very human things, emotional bias, fatigue. It leads to much more objective, precise strategies.
So it's like an objective layer on top of human strategy.
You could say that. It's not just precision, though. It's almost like an unfair advantage in what's still a very human-driven game.
Okay, so it's about leveling up human capability. But let's dig into the why a bit more. What are the core reasons? Why are traders, from the individual investor right up to the huge institutions, looking to AI? What's the actual problem it solves for them?
Well, at its heart, I think it's about unlocking human potential, really.
How so?
Imagine a trader spending hours just, manually crunching numbers or executing the same kind of repetitive trades over and over.
Yeah, that sounds tedious.
It is. AI can take that entire burden. So first, it's automation, handling those repetitive analytical tasks. That frees up the human trader to focus on the bigger picture.
Higher level strategy.
Exactly. Big picture thinking, spotting macro trends, crafting really innovative strategies that AI supports. It doesn't replace the strategist.
Okay, so automation is one big piece. What else?
Then there's improving precision, predicting market trends. AI can analyze just vast amounts of historical data, real-time data, far more than we could. And that helps reduce uncertainty.
Makes sense. Less guesswork.
Right. It also plays a really critical role in minimizing risk. Spotting anomalies, maybe potential fraud, or unexpected market jumps before they become huge problems.
Like an early warning system.
Kind of, yeah. And finally, it's a powerful tool for optimizing how you manage your portfolio, balancing assets, adjusting allocations based on risk and goals.
So AI handles the heavy lifting, lets humans be more strategic. You also mentioned something, democratization. That sounds interesting. For our listener, maybe someone without a deep quant background, how does AI level the playing field?
Yeah, that's a fascinating part of this. What's happening is that AI aims to make these really sophisticated trading tools accessible, even if you don't have, say, deep programming skills or an advanced math degree.
Okay.
And if we connect this to the bigger picture, it actually aligns perfectly with what global organizations like IOSCO are looking at, trying to foster financial integrity, stability.
Where does accessibility connect to stability?
Well, it's about making advanced capabilities, which used to be only for the really big players, available more broadly. It potentially lowers the barrier to entry for more sophisticated types of trading, making the market maybe a bit more diverse.
Right, spreading the capabilities out. Okay, so it's clear AI is becoming essential strategically, but what does that actually look like in terms of results? Can we put some numbers on this? What are the measurable goals?
Absolutely. We can talk specifics. For instance, a very common starting goal is just to drastically cut down the time spent on manual analysis.
Okay.
We're talking maybe 50% reduction, sometimes more. Machine learning algorithms can just process huge data sets almost instantly.
Wow, 50%. That frees up a lot of time.
Definitely. Then another big one, a quantifiable goal, is increasing market prediction accuracy. We're seeing targets and sometimes achievements in the range of 70–80%.
70 to 80%. That seems incredibly high for financial markets.
It is a huge jump. It's achieved using predictive models that pull in all sorts of variables, transaction volumes, yes,
Yeah.
and also real-time news, economic reports, even sentiment scraped from social media.
Social media sentiment, wow, okay.
It's about building a much, much richer picture of what might happen next.
Okay, that's a massive improvement in accuracy. What about the bottom line, though? The actual returns?
Well, in terms of profitability, traders might realistically aim for something like a 20–30% increase in annual returns. This comes from using automated strategies that can react and adjust positions much faster than a human could.
20 to 30% increase.
Huh.
That's significant.
It is. And on the risk side, a key goal is managing losses, maybe limiting losses per trade to less than, say, 2% of your total capital. This is done using what we call smart stop-loss tools.
Smart stop loss. How is that different from a regular stop loss?
Well, your basic stop-loss is just a fixed price point, right?
Yeah.
These AI-powered tools are dynamic. They can adjust that exit point based on real-time market volatility, learning from how the market has moved in the past. They try to find a more optimal exit, potentially saving you from getting stopped out too early in a temporary dip, or conversely getting you out before a real crash.
Ah, okay, so it adapts. That's clever. And what about the really big players, the institutions?
For them, yeah, a
Yep.
quantifiable goal might be processing millions of orders every single day with zero human intervention, just pure speed and efficiency. Millions.
Wow. And for individual traders, maybe the goal is more focused on using AI to personalize strategies, specifically to counteract those emotional biases we all struggle with when money's on the line.
Right, keeping the fear and greed in check.
Exactly. And all of this, whether it's for a huge institution or for you trading at home, it's powered by these core technologies: machine learning, deep learning, and natural language processing.
Okay, you mentioned those terms. How do they actually work? What's going on under the hood to make all this happen?
Well, fundamentally, AI works using algorithms designed to analyze massive amounts of data. They're looking for patterns, correlations, things that would be invisible to the human eye just because of the sheer scale.
Okay.
So machine learning, or ML, often uses what we call supervised models. Think of it like teaching the AI by showing it lots of examples with labels. So you feed it historical price data and tell it, this led to a price increase, this led to a decrease. It learns to predict future prices based on those past patterns.
Learning from examples. Got it.
Yeah.
And deep learning. Deep learning, or DL, is a bit more complex. It uses neural networks, which are kind of modeled after the human brain's structure. These are really good at handling unstructured data stuff that doesn't fit neatly into spreadsheets.
Like what kind of data?
News articles, company reports, even social media posts like tweets. Deep learning can understand the context, the nuance, the sentiment within that text.
Ah, so it can read the news and understand if it's good or bad for a stock.
Essentially, yes. There was a study, I think, from the Journal of King Saud University just this year, 2024, highlighting how AI significantly boosts accuracy in algorithmic trading. It does this by mining that critical data and providing tools that are actually accessible and reasonably economic. It really helps traders shift from just reacting to market moves to being more proactive.
That proactive shift sounds like the real game changer. So let's talk about the how then. The specific techniques and tools traders are actually using right now. What does this look like in practice? Let's start with predicting market movements.
Okay, yeah, this is where it gets practical. For prediction, you have tools like TrendSpider. They use AI to analyze complex chart patterns, Japanese candlesticks, all in real time. They claim pretty high precision, over 75%, even in choppy, volatile markets.
How do they do that analysis?
They use sophisticated algorithms. Sometimes it's things like linear regression for simpler forecasting, or they might use what are called recurrent neural networks, RNNs.
RNNs, what's special about those?
Think of RNNs as AI with memory. They can remember previous data points in a sequence like past prices, trading volumes, and use that context to make better forecasts about the next step in the trend.
Ah, like it understands the recent history.
Exactly. Yeah. And we're seeing platforms emerging like Intelligentsia, expected around 2025, that are integrating these kinds of models specifically for crypto and stocks. They offer automated alerts, trying to flag opportunities right when they pop up.
RNNs remembering data.
That's a powerful idea. Okay, so that's prediction. What about automating the actual trades, making the buy and sell decisions happen automatically? Yeah, for automation, you've got trading bots. Platforms like TradeSanta or Upstocks Pro are popular examples.
How do they work?
Well, they automate the execution based on rules you set up, or rules the AI develops. They're compatible with major exchanges. The AI part allows them to dynamically adjust the strategy on the fly, reacting to tiny market fluctuations much faster than a human could.
Right.
And this leads into high-frequency trading, HFT. That's where systems are executing thousands of trades per second.
Thousands per second. That's hard to even imagine.
It is impossible for a human. Now, the IMF did point out in 2024 that while HFT definitely adds liquidity to the market, which is generally good.
Makes it easier to buy and sell.
Right. But it can also sometimes increase volatility because things happen so incredibly fast. There are even, tutorials on YouTube showing simpler bots that use basic machine learning. They learn from their own past successful trades to try and refine their approach over time.
Constantly learning. Okay, that speed is incredible. Now, what about understanding the mood of the market? You mentioned sentiment analysis earlier. How does AI figure that out?
That's a huge area, especially now. AI uses something called natural language processing, NLP.
NLP? Yep.
It's basically about teaching computers to understand human language, the nuances, the context. So NLP tools analyze news feeds, social media streams, economic reports, all in real time.
Reading everything.
Pretty much. Tools like AlphaSense or StockGeist are designed to scan countless sources constantly. Measuring the overall sentiment, is the market feeling positive, negative, fearful? Forbes, actually updating their data for 2025, suggests that incorporating this sentiment analysis can improve trading decisions by as much as 40%.
40%, just from understanding the mood.
It seems so. It's incredibly important in markets that move fast on news or hype, like crypto. A single viral tweet or surprise announcement can swing prices wildly in minutes. AI can catch that shift instantly.
That really is a game changer for staying ahead. Okay, last piece of the how puzzle, risk management. How does AI help protect your capital?
Right, very important. AI models, like some from Kahoot, for example, can classify investments based on a calculated risk score. They use vast amounts of financial data, corporate filings, market history, everything to help diversify portfolios automatically based on your risk tolerance.
Diversification, okay.
And then there are techniques like reinforcement learning. This is where the AI essentially learns through trial and error, like a human does, but much faster.
How does that apply to risk?
It can learn from past trading mistakes. Maybe a stop loss was set too tight or too loose, and then dynamically adjust those risk parameters, like stop loss orders, in real time based on current conditions. The goal is to significantly cut down losses, especially during those really stressful, fast-moving market moments, building a more resilient portfolio, basically.
Dynamically adjusting risk based on learning. That's sophisticated. So for our listener who's maybe thinking about exploring this, what are some specific tools or platforms they should look into? Maybe some recommendations for 2025.
Sure. Looking at recent reviews, say from IG or Crypto Potato, there are a few interesting ones gaining traction for 2025, often catering to slightly different needs.
Okay.
For straightforward automated technical analysis, a tool called Madrisha seems to be getting good feedback.
Madrisha. Got it.
If you're looking for something more like personalized guidance or feedback on your trading, there's Swizet AI, which positions itself as a sort of AI mentor.
An AI mentor. Interesting.
Yeah. And then for people intrigued by interacting with AI conversationally, there are bots, like some from FBS, that are integrating ChatGPT. You can almost talk through your trading strategy with the bot.
Wow. Talking to your trading bot.
It's coming. And generally, these tools are being designed with more intuitive interfaces. The costs vary, of course, but many are becoming quite accessible even for individual traders. It shows that powerful AI isn't just locked away in the big institutions anymore.
Okay, that's a really helpful overview of the tool. So putting it all together, for someone listening now wanting to practically start using AI in their trading, where do they even begin? What are the first steps?
Yeah, good question. A fantastic starting point, honestly, is just to open a demo account.
Play money.
Exactly. Platforms like MetaTrader are common for this. It lets you experiment, try things out, without risking any real capital. That's crucial.
Makes sense. What next?
Then, if you're technically inclined, you could try programming some basic scripts, maybe using Python or MQL5, which is common on MetaTrader. You could start with simple algorithms. There are tons of tutorials and resources online to help with that.
Okay, so dip your toes in with coding if you can.
Right. But critically, whether you code it yourself or use a pre-built tool, you have to monitor performance rigorously.
How? What should you track?
Use metrics like the Sharpe ratio. That's a key one. It helps you understand the return you're getting relative to the risk you're taking. It's not just about raw profit, it's about risk-adjusted return.
Sharpe ratio. Got it.
And always, always refine your models through backtesting. Use historical data to see how your strategy would have performed in the past. Validate it before you trust it with real money.
Test.
Absolutely, yeah. And it's worth getting started now, because the trend is clear. Investing.com suggests AI adoption in trading is set to grow by maybe 30% by 2025. We're even seeing talk of quantum-inspired AI for even greater precision down the road.
Quantum-inspired AI sounds like the future is arriving fast. Okay, that's practical advice for starting out. Stepping back again, what's the big picture here? What does all this transformation really mean for the future of trading?
That really is the core question, isn't it? What it all means. Well, I think AI represents a truly profound paradigm shift.
A paradigm shift.
Yeah, it offers greater efficiency, much better predictive accuracy, and a significant reduction in those costly human errors. And ultimately, that should translate into security returns and much more robust risk management.
Better results, less risk.
That's the goal. By automating the analysis, the execution, AI doesn't just optimize performance. It also, as we discussed, makes sophisticated trading potentially more accessible, maybe more sustainable long-term for more people.
Right.
Crucially, this technology doesn't replace the trader. I really want to emphasize that. It empowers them. It fosters, ideally, a more efficient and perhaps even a more equitable financial ecosystem. It's about using technology to push the limits of what's possible.
That sounds incredibly promising, empowering the trader. But it can't all be smooth sailing, right?
Yeah.
We know technology always comes with challenges. What are some of the pitfalls, the potential downsides of integrating AI into trading?
Oh, absolutely. It's vital to be realistic. There are definitely challenges. One major one is bias in the training data.
Bias, how so?
Well, if the historical data used to teach the AI is incomplete or reflects past biases or just doesn't account for completely new situations.
Like a major geopolitical crisis, maybe.
Exactly, like something unprecedented. Momrant's LLP highlighted this risk. The AI might make inaccurate predictions because its training data didn't prepare it for that specific black swan event.
Garbage in, garbage out, essentially.
To some extent, yes, or just incomplete data in, incomplete predictions out. Another big concern is just over-reliance on the tech itself.
Putting too much faith in the algorithm.
Yeah. What if there's a technical failure, a system crash, or even a cyber attack?
Yeah.
That could cause massive cascading losses across a portfolio very, very quickly. AlgoZone.ai pointed this out as a significant risk.
Scary thought.
It is. And let's not forget the practical barrier, the initial cost. Getting set up with advanced AI hardware and software, especially for sophisticated models, can be expensive. We're talking potentially thousands of dollars just to get started seriously, which can be a real hurdle for independent traders.
Right. The barrier to entry might still be high for the cutting edge. And beyond the individual trader, what about the wider system? Are there broader challenges as AI becomes more dominant?
Yes, absolutely. This is where regulators like the IMF and the European Central Bank, the ECB, are really focusing.
What are their concerns?
They've noted that widespread AI use, especially things like HFT, could potentially increase overall market volatility. Think about algorithmic flash crashes, where prices plummet inexplicably fast due to interacting algorithms. That poses risks to financial stability.
The whole system could become less stable.
It's a concern they're actively studying. Then there are critical ethical questions around algorithm transparency.
Like understanding why the AI made a certain trade.
Exactly, the black box problem. If we don't understand the logic, how can we regulate it or trust it completely? And related to that are issues of data privacy. Where is all this trading data going? Who owns it? These clearly demand updated regulatory frameworks to keep markets fair and stable.
Lots for regulators to figure out.
Definitely. And one last practical challenge. For traders who want to really customize these AI models, beyond just using off-the-shelf tools, the learning curve can be steep. It often requires real programming skills, data science knowledge, things many traditional traders might not have.
So continuous learning is key.
Absolutely. Overcoming all these challenges, bias, technical risk, cost, regulations, skills, it really requires continuous education, diversifying your strategies so you're not reliant on just one AI, and crucially, collaboration between traders, tech providers, and regulators.
That makes a lot of sense. So as we wrap up this deep dive, it's clear, isn't it? AI has this immense potential to reshape trading for you, the listener. It offers incredible efficiency, predictive power.
Huge potential, yes.
But as we just discussed, it's definitely not without some significant challenges that really need careful thought and management.
Precisely. AI in trading is undeniably a powerful tool. There's no question about that. But its true value, and perhaps more importantly, its ethical application, that ultimately depends on informed human oversight.
The human element remains critical.
Absolutely critical. And a commitment from everyone involved to keep learning, keep adapting as the technology evolves. Maybe something for you to consider is this. As AI gets even smarter, even more capable, what does the human role become? It seems like strategic decision-making, setting the ethical guardrails, governing these powerful systems, that becomes even more vital for a truly successful and, importantly, a stable financial future.